Hi, Finance Bro here. I explain boring finance stuff in a funny way with easily digestible information. Stocks finished last week lower after a sell-off in tech that saw the Nasdaq Composite exit lead. The losses, falling more than 1%. Still, the equal-weighted S&P 500 logged a weekly gain for the seventh straight week as investors continued to look outside the Magnificent Seven tech leaders to power the next leg of the market rally. In the week ahead, investors will face the final major test before the Federal Reserve's March 20th meeting with the February Consumer Price Index CPI report out Tuesday, which offers an updated look at inflation. Retail sales and consumer sentiment reports will feature on the economic calendar in the back half of the week. A lighter earnings schedule is on deck with Dollar Tree DLTR, Dollar General DG, Sporting Goods DKS, Adobe ADBE, and Ulta Beauty ULTA highlighting the list of quarterly reports. Price check. Federal Reserve Chair Jerome Powell has said repeatedly the central bank wants more confidence in inflation's path downward before cutting interest rates. Tuesday's CPI reading follows a hotter-than-expected January report that showed inflation's decline could be bumpy and prompted investors to price in fewer interest rate cuts this year. For February, Wall Street expects headline inflation to log an annual gain of 3.1%, unchanged from the headline number in January. According to estimates from Bloomberg, prices are set to rise 0.4% on a month-over-month basis, an increase from the 0.3% rise seen in January. On a core basis, which strips out food and energy, prices are expected to have increased 3.7% year-over-year, a slowdown from the 3.9% increase seen in January. Monthly core price increases are expected to clock in at 0.3%, lower than the 0.4% increase seen in January. January's CPI data came in hotter than expected and renewed concerns about how quickly inflation could be brought to a heel. Wells Fargo's team of economists led by Jay Bryson wrote in a research note on Friday, despite the strong start to the year, we ultimately believe the disinflation trend remains in place. We expect the February data to show that while inflation remains frustratingly high, the underlying trend is not strengthening. In January, retail sales posted their steepest decline since March 2023. But economists don't expect that trend continued in February. Economists expect Thursday morning's report will show retail sales grew 0.8% month-over-month in February, a rebound from the 0.8% decline seen in the first month of the year, excluding autos and gas. Economists project sales increased 0.2% month-over-month compared to a 0.5% decline in January. According to data from Bloomberg, retail sales will bounce back in February following the weather-related weakness in January and the stronger tax refund season, wrote economists at Oxford Economics in a note on Friday, which would leave consumption growth on track for an above 2% annualized gain in Q1. A strong pace. The market action following Friday's jobs report showed a distinct shift in trading action. After weeks of an AI-fueled stock market rally, Nvidia NVDA fell nearly 5%. Other popular tech trades that caught a bit in the AI euphoria also slumped, including roughly 4% drops from ARM Holdings, ARM and Dell, among others. The move follows a divergence in the Magnificent Seven trade that has emerged, notably, lagging performance from Apple and Tesla. This strategists have argued could continue to open a lane for a broadening of the market rally. This trend was seen throughout the week, with the equal-weight S&P 500 hitting its first record high in more than 2 years. Both that index and the small-cap Russell 2000 index run outperformed the broader market during Friday's sell-off. At this point in time, we're going to start to see a broadening out of this market. Johnson's call for a broadening out of the market rally has been a common one across Wall Street to start 2024. The case for other stocks to rally is rooted in increasing earnings estimates for stocks outside the tech leaders and the overall health of the U.S. economy. that story largely remains intact. Morgan chief U.S. economist Michael Ferroli noted after the February jobs report that continued strength in the labor market pushed the firm's outlook for second quarter gross domestic product, GDP, to 1.5% annualized from 0.5%. Strategists believe these increased economic forecasts will be reflected in company earnings beyond just tech stocks, and companies are telling a similar story. During earnings calls spanning from December 15th to March 7th, 47 S&P 500 companies cited the term recession, according to research from FactSet. It was the lowest number of companies mentioning the phrase in 2 years and was below both the 5- and 10-year averages of mentions. And that wraps up our deep dive into the interplay between inflation, retail sales, and the market's broadening rally. Understanding these trends not only helps us navigate our personal finances better, but also empowers us to make more informed investment decisions amidst these changing economic times. Now, I want to hear from you. How have you felt the impact of inflation in your day-to-day life? Are you adjusting your investment strategies in response to the market rally? Drop your thoughts, experiences, and strategies in the comments below. Let's learn from each other and build a community that's financially savvy and resilient. If you found this video insightful, please hit that like button. It really supports the channel. And if you're not yet subscribed, now's the time. Join our community for more videos where we break down complex financial topics into manageable insights. Don't forget to hit the notification bell so you never miss out on our weekly updates that keep you informed and ahead of the curve. Share this video with friends or family who might benefit from it. Let's spread the knowledge and help everyone navigate these economic waves together. For more tips, strategies, and insights, follow us on our social media channels, linked in the description below. Stay informed, stay engaged, and let's tackle these financial challenges head on. Until next time, keep analyzing, keep investing, and keep growing. See you in the next video.